Hello traders, this is Dimitrios Haralampidis from Snail Trading, and in this video I'm gonna explain you my concerns about the recent price action in the Australian dollar. It was quite a volatile week, as you know, and prices have moved above the 21-week SMA during the main course of the week, only to reverse sharply lower and close below the SMA on Friday after the NFP report. As we can see, the reversal created a candle that looked like a doji and reflects indecision of investors to maintain their long positions during the weekend above the level of the 21-week SMA. However, the momentum on the RSI indicator, the 14-week RSI, seems to be supported by a trend line, but the touches on the trend line are only two, and they suggest that possibly the trend line is a little bit forced here. We have a bullish cross here, but a slope, a negative slope that suggests that maybe next week the oscillator will move below the SMA, creating a false break, a false cross here. And if we look at the daily chart, we see that prices reacted here on Wednesday to the 21-day SMA, and we had a very bullish candle here breaking above all the SMAs, and until we touched this trend line, which provided just a little resistance for the day, and the next day the prices moved above the trend line, but the upside was limited by this channel, which provided resistance. And on Friday we have a very sharp decline from this resistance, which is a bearish signal. On the other hand, we had a break above this trend line a few days ago, and the cross with the SMA here is not confirmed, and it could reverse higher next Monday. The problem here is with how we can count this whole move here, and so far I decided to count this as a complete five wave move to the downside for wave 1, A, B, C for wave 2, and then 3, 4, 5, which it is acceptable from an Elliott wave perspective, as it supports the alternation rule of the Elliott wave for a prolonged and complex wave 2 and a short and simple wave 4, which may have occurred here. And the alternative would be a very bearish alternative, on the other hand, which will suggest that this is wave 1, 2, and this is wave 1 of wave 3, and this is a deep wave 2 of 3, suggesting that prices are moving to much lower levels, which on the other hand creates problems with our weekly chart, because if this is only wave 2 of 3, this suggests that prices are moving to much higher to much lower levels, probably targeting these lows here. And if that's the case, wave 5, this wave 5 becomes too long compared to the other waves here. Although this is not improbable, as the only rule with regards to the length of the waves in Elliott wave is that wave 3 cannot be the smallest one, and in this case wave 1 is smaller than 3, so the possibility of an extended wave 5 to the downside is very probable. And so if we have 1, 2, and then 1, 2, 3, 4, 5, we may be looking for a low, a new low lower than this of 2008. uh, and if we look into lower time frames, for example the 4-hour chart, I currently has implemented the bullish scenario here. I don't show you the bearish scenario, and here we have the waves as I explained them before. This is wave 1, A, B and C for wave 2, and then we have 1, 2, 3, 4, 5 for wave 3, wave 4 and wave 5 to the downside, which in the 4-hour chart it looks like an ABC, but it can be counted like a 5-wave move to the downside, like 1, 2, 3, 4 and 5 to the downside. And from here this overlapping price action to the upside can be counted well as a leading diagonal. Then we have a 3-wave move to the downside as an ABC, and a sharp bounce to the upside, followed by another sharp decline, which for now it counts as a 3-wave move. However, this decline here is very sharp, and it looks like a wave 3, in which case we will have a reaction to the upside and then a continuation to the downside. And this is what the RSI suggests here, because we have a break, not a decisive break, but still a break, a close below this trend line that was supporting the bullishness of this move so far. And if we go even closer for a 1-hour chart, we see the internals of this move. We have A, B, C for wave 1, wave 2, which almost made a new low here. We have just less than 1 pip here, the difference with this low, and then again 3 waves to the upside, A, B, C for wave 3. Then we have this move, which is A, B, C to the downside for wave 4, A, B, C for wave 5, and this completes probably wave 1. Then we have W, X, Y for wave 2, and 5 waves to the upside for wave 1 of 3 probably. And if this is actually an A, B, C, it should be finished around this level, and hopefully the 78.6% Fibonacci retracement of this up move will hold, and we will not have another wave to the downside, and prices will continue to the upside for here for the bullish scenario. The alternative is that this is an ABC correction, and prices will continue to the downside for a long term, for according to the long term bearish view. If we look again at the 4-hour chart, I have also drawn here the Fibonacci retracements for this move here, which according to the bearish scenario is wave 1 of 3, and we see how prices were rejected at the 78.6% Fibonacci retracement of this move. So both scenarios are equally probable at the current point, and we cannot choose one between the two. The problem with the bullish view is that this decline is very sharp, and it has broken below the SMAs on the 4-hour chart, and also on the 1-hour chart. We also have a bearish cross here. Prices have moved below the 144 SMA, which was providing support here, but it is not improbable, as we also had a break here and prices reversed again higher. The momentum seems the RSI is deep into oversold territory here, and therefore a reversal from here is not improbable. At the current point, we can choose uh, one count over the other, and both of them seem equally probable. So the best way to trade the instrument would be not to trade it actually until we have at least a break below this level, the psychological level of 0.70, 0.7, or a break above this level at 4240, excuse me, 0.7240, which will provide us with a more clear picture to where the instrument is actually heading, and this will be actually uh, this will actually depend on the strength of the dollar during the coming week, and I remind you that we expect Yellen's testimony on Wednesday, and until then, probably prices will move sideways here. But again, this is a 1 hour chart, and I don't know how price action can unfold in order not to invalidate one of the two scenarios during the first 2 days of the week. So we expect the picture to become more clear in the first days of the week, and a break below this level opens the path for a continuation of the bear trend, and a break above this level suggests a long-term bullish reversal for the pair. As if prices move above this level, that would mean that on the 4-hour chart they would have moved above the 78.6% retracement of this move, and it will be unlikely that this is still a wave 2 of 3. So for now we stay aside and monitoring the pair until price action shows us which is the correct count of the two. Thank you for watching, and have a nice weekend.